Markets usually do not like surprises, but lately, crypto does not seem to react much. That startling remark from Ray Youssef, chief executive officer of No Ones, hits us like a thunderbolt in the midst of a restless world. Just as new waves of tension arise in the Middle East, and rumors of digital warfare swirl across international headlines, one might expect cryptocurrency to spark and sizzle with volatility. But Bitcoin, that cryptocurrency giant known so often as a store of value, is behaving more like a moody tech stock than a safe harbor. Today, we are plunging headlong into this world of crypto, conflict, and shifting market narratives to uncover why Bitcoin's supposed hedge asset status is bending under the weight of tumultuous world events. We are going to peel back every layer of this emerging puzzle: blockchain hacks that target entire countries, startling price stagnation in Bitcoin despite intensifying geopolitical strife, and the curious way that investors appear to be retreating from altcoins while still not exactly ramping up investment in flagship tokens. Through it all, we will see just how fragile the notion of a safe haven can be when the entire landscape of finance and global power is evolving almost by the hour. Let us begin with the heart of the story. Tensions between Israel and Iran are boiling under the surface, and the world has been bracing for potential escalations. This type of geopolitical strife, especially in the Middle East, has historically influenced investors to park their funds in assets perceived as more stable. Gold, for instance, typically draws an influx of interest during times of worldwide upheaval. Bitcoin, widely promoted by crypto aficionados as the digital gold, was long believed to be part of that club of safe haven assets. But so far, the conflict has left the Bitcoin price oddly unshaken. Over the past few weeks, the Middle East has been contending with new waves of political uncertainty. Global leaders have issued stern warnings to one another, and at least one Iranian crypto exchange was the victim of a mammoth security breach. This hack targeted Iran's biggest digital currency exchange, known as Nobitex, resulting in what some claim was a theft worth hundreds of millions of dollars in assorted tokens. Allegedly, a notorious hacking group called Predatory Sparrow, rumored to have ties to Israel, orchestrated the attack. In times gone by, such an event could have sent shockwaves across the entire crypto market. But the really surprising part? Outside of a momentary flicker of worry, the price of Bitcoin barely budged. At a fundamental level, these are the moments that test an asset's resilience as a shield against chaos. Should war drums get louder, or severe financial sanctions tighten around a region, how would a decentralized currency behave? That is the question Ray Youssef poses as he observes the calm seas of Bitcoin's value. According to Youssef, the reaction to these heightened tensions reveals that Bitcoin, more than ever, is tracking technology stock performance, rather than carving out a niche narrative as an asset that soars when global storm clouds build. One might call it a crisis of identity, or a sign that the market is simply evolving differently than many longtime believers might have hoped. Yet, the entire script is far more dramatic than a mere discussion of price. The hack on Nobitex in Iran, apparently carried out by a group with suspected links to Israel, indicates that cryptocurrency is increasingly caught in the crossfire of international quarrels. This raises a swirl of questions. How vulnerable are domestic crypto exchanges to the tools of digital warfare? Are these platforms inadvertently drawn into the orbit of conflict, effectively becoming strategic targets? And how does the slow reaction in Bitcoin's price reflect broader investor psychology, particularly in an environment where major global players might be testing each other's firewalls and readiness? Ray Youssef draws attention to a shift in capital flow. If Bitcoin is not rallying on the headlines, it is at least attracting a certain portion of the market away from relatively volatile altcoins. Bitcoin dominance, a metric that tracks the share of the entire crypto market held by the top token, has been creeping ever closer to 2/3 of the total market valuation. But is that truly the sign of a reinvigorated Bitcoin safe haven story, or just a sign that altcoin traders are running for cover without trusting Bitcoin to ride high on headlines of potential warfare? The events of the last few weeks reflect a changing dynamic that might surprise many viewers who recall those older predictions of Bitcoin skyrocketing whenever there was the faintest whiff of political upheaval or inflationary risk. At the moment, Bitcoin seems content to maintain a range around $105,000, while Ethereum, the second largest cryptocurrency by market cap, is rolling between $2,120 and $2,330 over an extended period. This quiet might lull some investors into a sense that nothing of significance is happening. However, behind the scenes, we are seeing the possibility of entire countries exploring the threshold between hacking each other's finances and imposing new sanctions. That is not a trifling matter. The question is, will the next spark of conflict jolt the crypto world or continue leaving it unruffled? Now, let us dig deeper into the idea that Bitcoin is failing as a hedge asset. The fundamental premise of Bitcoin's creation was to exist as a decentralized currency, immune to the whims of governments and central banks, particularly in moments of crisis. Over the years, countless voices in the crypto community have championed it as the digital gold, destined to rise whenever uncertainty rattles traditional markets. But Youssef cautions that right now, the correlation between Bitcoin and standard technology stocks is still high, hovering at a figure around 68%, which is much too large for a putative safe haven. One might argue that, historically, gold took time to be recognized as a trustworthy store of value. Could we simply be in an early stage of Bitcoin's evolution, waiting for it to become the sanctuary its advocates believe it is? Or, in the real world, are the majority of people simply not viewing Bitcoin through that lens at all? After all, retail investors, who might once have seen Bitcoin as an easy way to store funds away from government interference, also witnessed bruising dips and wild price swings over the last few years, particularly as the global pandemic changed financial realities across the board. On the other hand, the stealth shift in the landscape occurs beyond mere price movement. Consider the possibility of capital controls. If a country like Iran experienced abrupt sanctions that lock its citizens out of global financial institutions, people might suddenly see Bitcoin as an indispensable conduit to move funds internationally. That is part of why the hack on Nobitex is so significant. If Iranians are using crypto exchanges as a loophole to circumvent sanctions or simply to protect personal capital, a security breach that large hints at how easily conflicts in the real world can spill over into the domain of digital assets. Here is a tantalizing thought. Could the purely technological aspects of Bitcoin eventually revive its use as a hedge in times of conflict, once global watchers see actual capital fleeing to it? In other words, if an acute crisis hits and government-imposed controls tighten, might we see Bitcoin break out of its slump, snapping away from its correlation with tech stocks? Youssef's commentary suggests yes, but only under conditions that tangibly impact how and why people use crypto in urgent ways. The existence of digital warfare alone might not do it, not if the tensions themselves do not disrupt the day-to-day need for international transactions. Before we press on, here is our first friendly call to action. If you are as fascinated by these roiling undercurrents in the crypto world as we are, consider giving this story a boost. Show a little love, share it, or give it a like so we can spread the word among everyone who wonders what happens next in this high-stakes chessboard of digital finance and global politics. Let us expand the lens a bit. The conflict in the Middle East, the possibility of heightened hostilities, and the demonstration of offensive digital strikes all feed a narrative that is bigger than crypto itself. Traditional investors always keep watch over events like these, since any sudden outbreak of violence or sanctions can disrupt normal trade routes, spike the price of oil, or hamper the flow of money in entire regions. In that sense, the question is not just whether Bitcoin's price moves, but whether it will ever fulfill the prophecy of being an alternative system of global finance that outmaneuvers old institutions. What we are really seeing might be an evolution in how crypto communities respond. Maybe they are less reactive to breaking scandals and more inclined to see digital assets as a long-term bet. Or maybe it indicates pure uncertainty, leading investors to stay on the sidelines and wait for confirmation before making major plays. Interestingly, large Ethereum holders, the so-called whales, have reportedly added well over 871,000 ETCs in a relatively short span of time, yet the price remains pinned to a narrow range. This raises the implication that even big fish in the Ethereum ocean sense that the real fireworks in the Middle East have not yet reached a level to jar open the floodgates. Nevertheless, it is wise not to discount the potential for bigger revelations. If the alleged hacker group behind the Nobitex breach truly has ties to a nation-state, it might only be the first salvo in a larger campaign. That alone underscores the complicated relationship between geopolitics and crypto. A decentralized world currency can be an avenue of freedom, but it also becomes entangled in espionage, sabotage, and the overshadowing threat of powerful organizations that manipulate the flow of funds behind the scenes. A few wrong moves, and entire networks of financial activity can be compromised. Now, imagine a scenario in which tensions do flare up to an extreme. Borders close, banks halt transactions, and people face restrictions on moving their money. That is precisely the moment when, historically, we might expect a so-called hedge asset to spike in demand. If the Middle East conflict escalates further, the infrastructure for sending or receiving money might be subject to partial shutdowns, leading both businesses and individuals to turn to crypto for an alternative. The question is whether the broader market truly recognizes that potential, or if it simply lumps Bitcoin in with the rest of the high-risk, high-reward assets that feature in daily speculation. One of the more surprising dimensions here is that altcoins have not performed strongly either. Usually, in times of volatility, these smaller projects, with their various promises and unique features, can either explode upward or crash spectacularly. Instead, we have a phenomenon where many altcoin holders appear to be retreating, pushing Bitcoin's dominance steadily upward toward roughly 2/3 of the crypto market. Yet that exodus from altcoins does not seem to be accompanied by a booming enthusiasm for Bitcoin. Ray Youssef cautions that this is more like risk aversion than a confident bet on Bitcoin's outperformance in conflict scenarios. Let us take a step back. The big question remains, is Bitcoin the unstoppable digital gold, or is it, for now, just another ticker symbol that sways with the fortunes of broader tech stocks? Detractors point to the strong correlation with the Nasdaq as evidence that Bitcoin's fate is tied to the performance of risk-on equities. Proponents say that Bitcoin's day in the safe haven sun will come, but only once global financial friction goes from hypothetical to unavoidable. As worrying as the Israel-Iran situation might be, it remains in a phase of tension and sporadic cyber hostility, but it has not yet forced typical investors to fundamentally reevaluate their entire approach to securing wealth. Meanwhile, the infiltration and near sabotage of a major Iranian crypto exchange loom as a warning sign to all. If a platform that handles potentially hundreds of millions of dollars in trading volume can be compromised, what does that mean for smaller, less secured exchanges in other parts of the world? And does that vulnerability, ironically, drive people toward more decentralized peer-to-peer solutions, the very type Ray Youssef's No One's platform might represent? That leads us to wonder if the real shift will be from centralized exchanges to purely trustless protocols, rather than from altcoins to Bitcoin. Beyond monetary angles, it is also about public perception. All it takes is one major conflagration, whether diplomatic or military, and the window for normal commerce and capital deployment slams shut for a region. Bitcoin's supporters then argue that its decentralized structure becomes indispensable, allowing individuals to bypass the tangles of international tensions. Yet the critical question remains why Bitcoin prices did not jump at the first whiff of trouble. Could it be that the market at large needs a more tangible demonstration of necessity, something bigger than the breach of a single exchange, or the possibility of heightened sanctions? Consider a scenario where additional hacking groups come forward, each backed by a different nation-state, orchestrating a series of crippling attacks on major financial networks in the Middle East. If Iranian citizens or Israeli citizens discover that their banks are suddenly off-limits, or if traditional flows of livelihood are cut off, that is the kind of impetus we might expect to drive them en masse toward crypto transactions. In such a moment, the correlation to tech stocks could break, spurring a new wave of market behavior that transforms the entire conversation around crypto as a safe haven. We might all be witnessing the calm before a far larger storm. Cryptocurrency watchers who recall periods of dramatic movement during political crises may be surprised by the current relative stillness. But as Ray Youssef highlights, that does not mean these storms are passing by harmlessly. They might be laying the groundwork for a substantial pivot in how individuals and institutions view crypto's basic purpose. Eventually, though, the changing interplay of hacking threats, suspicious alliances, and potential expansions of direct conflict in the Middle East might push black market channels of cryptocurrency onto the center stage of mainstream debate. What happens when major state actors consider crypto platforms as strategic liabilities? Suddenly, the calls for regulation ramp up worldwide. We have already seen the seeds of that approach in various parts of the globe. If a scenario emerges where countries blame crypto transactions for enabling cross-border inflows of capital that fund further tensions, calls for draconian restrictions may grow louder. Yet the dream of Bitcoin as a resilient, borderless money remains vivid. We simply have not seen that dream tested to its fullest extent over these past few weeks. Yes, there was a jarring hack in Iran. Yes, there are rumblings and suspicions of infiltration by a hacking collective. Yes, Israel and Iran both glower at each other. But everyday markets remain, so far, unaffected on the scale that might trigger a flight into crypto. That is why our overarching question drifts back. Will another threshold be crossed that makes Bitcoin switch from mundane ticker symbol to irrationally exuberant safe haven in the blink of an eye? Before we examine some final revelations, here is our second and final friendly call to action. If you find yourself caught up in the intrigue of global conflicts meeting decentralized currency, why not hit the subscribe button or follow our journey more closely? When the next wave of seismic shifts hits, you will be right here with us to ride the crest of that momentum. Getting back to the subject at hand, one possibility that Youssef alludes to is a partial fracturing of the global crypto space. If the scenario escalates, capital controls in places like Iran might become more severe, intensifying the role of peer-to-peer platforms, black market trades, or simply direct use of decentralized protocols that do not rely on centralized verification. This might be the real pivot away from altcoins, especially those with questionable liquidity or a lack of reliable infrastructure, and mark a broader push into Bitcoin. But only time can tell if that shift will happen smoothly or dramatically. Meanwhile, altcoin communities continue to hum along, releasing various features and forging allegiances with new institutions, all while warily eyeing a Bitcoin that creeps toward 2/3 of total crypto dominance. Some suspect that if tensions flare drastically, not only would a final wave of altcoin traders scramble to the safer waters of Bitcoin, but new retail entrants might also funnel directly into the number one crypto, viewing it as more recognizable and less prone to meltdown than the quickly fluctuating field of smaller tokens. One cannot help but wonder if many of the sensational statements about digital gold and unstoppable freedoms have done Bitcoin a disservice by building up an expectation that it would rally at the first sign of trouble. Thus, the frustration of seeing it trade sideways at $105,000 might point to a mismatch between theoretical narratives and current market realities. Or perhaps the global climate, although teetering, has not reached the tipping point that truly breaks the old rules of finance. For those of us watching, the real question remains whether the unique confluence of geopolitical strain in the Middle East, hacking threats, and the unstoppable flow of capital willing to shift at a moment's notice might deliver the ultimate test of Bitcoin's identity. Will it break free from the gravitational pull of big tech stocks and ascend like the new gold standard that many believed it was destined to be? Or will it remain, for the foreseeable future, tethered to standard risk assets, responding more to Federal Reserve announcements and earnings reports than to the tremors of international friction? Where does that leave everyday individuals caught in the crosshairs? If you are in Iran, especially in a region that might see further sanctions, you might already be relying on cryptocurrency for certain cross-border activities out of sheer necessity. The hack of Nobitex may thus represent a deeper blow than the outside world might realize, essentially robbing some everyday users of their options. Meanwhile, those in Israel who watch these developments from the other side of the confrontation may see ample cause to steer clear of any newly minted tokens that could lose liquidity in a heartbeat if stricter measures pass. For both sides, the story is not about pumping or dumping, but about survival. As we draw closer to the heart of this narrative, a realization sets in. The stakes are far higher than a single day's price chart. Whether Bitcoin truly reacts like a hedge asset or more like a high-volatility tech stock might be less pertinent than whether millions of people will need it when traditional pipelines crumble. If war, sanctions, or closures come knocking, perhaps the impetus for a stable store of value or a frictionless payment system will become impossible to ignore. Crypto's role could morph overnight from an investment vehicle to a lifeline, but only if it proves itself safe from hacking, secure against sabotage, and recognized widely enough to trade and transfer with relative ease. That is why Ray Youssef's observation resonates so strongly. We are seeing the tip of the iceberg. The lack of dramatic movement is not necessarily a sign of irrelevance. It may be a test of anticipation. If the conflict in the Middle East intensifies, or if new hacking incidents reveal the vulnerability of entire financial ecosystems, the crypto world may face a day of reckoning. On that day, if flows of capital pile into Bitcoin, It could shatter the assumptions of those who have grown accustomed to mild correlation with technology stocks. Conversely, if no such large-scale pivot takes place, it might forever alter the narrative that Bitcoin stands ready to shield us from global uncertainty. In the end, we stand on the precipice of a new era, one marked by the entanglement of real-world conflicts, financial warfare, and the uncertain promise of decentralized money. Bitcoin's ability to remain motionless through this swirl of tension in Israel and Iran might prove fleeting if headlines turn darker, or it might be a harbinger of a future where crypto follows conventional markets more than we ever imagined. The reality is that the Middle East has long been a cauldron of complexity, and any escalation there has the potential to ripple around the planet. Try as we might to peer into the future, the big reveal could be just around the corner, triggered by an event that many might see as improbable until it happens. And when it does, we may look back on these weeks of calm and wonder why we ever doubted the powerful undercurrent swirling beneath the surface. Ultimately, whether Bitcoin transforms fully into a refuge for those threatened by capital controls and war, or whether it remains an asset that trades in tandem with the fortunes of the tech market, only time will tell. But we cannot deny that the moment is charged with the energy of possibility, and that the next wave of conflict or calm may reshape crypto's destiny in the global financial arena.